Hello everyone, my name is Nate and today I will be talking about national income accounts. The basic definition for national income accounts are data that helps keep track of the flows of money between the different sectors of an economy. And basically in English terms, that means it's a bunch of data that helps people understand the state of our economy and the state of the economies around the world. And these accounts, this data serves a couple of purposes. The first one for being for analytical uses. This data helps economic understanding universally. So by understanding the data given, we can make well-informed decisions and projections of the state of our economy. And the second reason these accounts are very useful is for economic advisors when helping countries get out of a recession. Normally, the first step in helping a country get out of a recession is to update and make the accounts of that country more efficient. Because the more efficient the account, the more efficient and the more ready the economy is. This data is very important and it's collected by the Bureau of Economic Analysis. On their website, they give interactive reports on national accounts for our economy. And these accounts include GDP, personal income and outlays, corporate profits, government receipts, production accounts, and innovation accounts. But for our purposes and for the AP exam, we're only required to talk about GDP. The first step to understanding GDP and national accounts is knowing how to understand and use a circular flow diagram. Basically, what that is a simplified representation of how money, goods and services, and the factors of production flow throughout an economy. And in this simplified representation, there are two inhabitants. The first being a household, or a person or group of people that share income. And the second are firms, or groups or organizations that sell goods and services. And in this simplified representation, there are two markets. The first being the product market, where goods and services are bought and sold. And the second being the factor market, where resources such as labor and capital are bought and sold. As you can see on the circular flow diagram projected on the screen, money flows from households to firms and product markets because people are buying goods and services from a company or an organization. And you can also see that money flows from firms to households in factor markets because firms are paying people for their time, labor, or capital. The goal of the circular flow diagram is to help us visualize the principles behind the national account. And the goal of the national account is to help us understand and keep track of how our economy is doing. And there's no better way to understand our economy than through gross domestic product, or GDP. GDP is the value of all final goods and services produced in an economy during a given time. Basically, what it's telling us is how much we are producing during a given time frame. And it only takes into account final goods and services. And there are three approaches to calculating how much we are producing. The first being the value-added approach, the second, the expenditure approach, and the third, the income approach. The value-added approach surveys all firms and adds up all the final goods and services produced in an economy during that given year. And to find this calculation, you take the total value of everything produced and subtract it by the value of intermediate goods. And in this case scenario on the screen, if we were trying to find the value added GDP of growing oranges, you take the output of growing oranges minus the input of growing oranges and add all those values together to get the value added approach to GDP of growing oranges. The next approach to calculating GDP is the expenditure approach, and this is the method we are all most familiar with. In this method, to calculate GDP, we add up aggregate spending on domestically produced goods and services. Aggregate spending meaning consumption, investment, government spending, and net exports. And as you can see, that gives us the equation of C plus I plus G plus XN equals GDP. The final approach to calculating GDP is called the income approach, and in this method we use its namesake. In the income approach, you calculate the total factor income in an economy during a given year. And as you can see on the screen, you add up rents, interest, profits, statistical adjustment, and wages to calculate GDP in the income approach. On the screen are some charts to highlight some of the differences between each approach. Each approach, though they have their differences, are very much alike because their formulas allow us to avoid double counting in the GDP production. The trick to measuring GDP is to avoid double counting. Each approach to calculating GDP includes a way to avoid counting the value of inputs twice, once at the production stage and again in the value of the final product. Likewise, the value of used goods should not be counted because their value was part of GDP when the goods were new. Now that we understand how to calculate GDP, it's important to understand some of the restrictions that go along with calculating GDP. GDP includes and doesn't include specific things, so it's very important to understand. GDP only includes domestically produced final goods. It does not include intermediate goods and services, inputs, used goods, financial assets, or foreign produced goods and services. For example, if I bought this pen at Office Depot and it was made somewhere in the United States, it would be counted in the production or in the calculation of GDP because it's a domestically produced final good. But if I tried to sell this to one of my classmates, that would not be considered in the GDP because it is a used good. So bear with me, everyone. You only have to see my face this close for like 30 more seconds while I wrap up national income accounts. Like I said before, national income accounts are basically just data that help people understand the state of our economy. And this data may seem unimportant to us right now, but it serves really useful purposes for analytical uses and for economic advisors. And as a whole, it increases economic understanding universally. So I leave you guys with this political cartoon. I hope you guys learned something about national income accounts that you didn't know before. And thanks for watching.